Morning, Steve Free in Chicago with the morning grain comments. Well, right now it's beautiful and sunny in Chicago. There's some rains out in the western Midwest that will move across to the eastern Midwest this weekend. But overall, 6 to 10 day outlook calls for normal to above temperatures and maybe normal rainfall. The 8 to 14 day is about the same, but showing some dryness that could pop up in the U.S. northern plains. Not a lot of worries as far as U.S. weather forecasts are concerned. At the annual Milling and Baking Conference this year, the weather guy said that U.S. weather looks okay. He's a little bit worried about dryness in parts of Canada and Australia. He's going to be watching pretty closely all of the El Nino type normal global weather situations with some dryness maybe in Indonesia, but he's not concerned about that. He's also going to be watching some of the dryness maybe in Western Africa and what it might impact as far as the cocoa crop. As far as here in the United States, most people are looking for a normal U.S. summer weather pattern. While I was gone the last 2 days, we had some certainly interesting markets with wheat rallying because of the freeze up in Canada and concern of maybe about U.S. crops. Today, Informa is going to be coming out with their estimates as of June 1st for U.S. and world crops, and we'll see if they change anything as far as the winter wheat crop is concerned. This drier pattern for the southern plains is probably going to help, especially the Kansas crop, kind of outgrow some of its wet feet and could help improve some of the bushels and hopefully some of the protein outlook. Also, as far as the conference is concerned, the corn trader, the corn analyst suggested that corn prices should continue to drift lower as long as the U.S. Weather is okay. The soybean guy also looked for lower prices in soybeans. It was interesting that on the soybean oil panel, there was a wide range of where October, November, December soybean oil futures might be. The low is 28 cents, linking that soybean oil will follow soybean prices lower. The higher was 38 cents because of the uncertainty of palm oil production and what happened as far as U.S. EPA mandates on higher biofuel demand. Farmers selling picked up in 2014 corn sales on this little rally, still not selling beans. And as far as what we see, technically speaking, beans are nearing resistance at the 950 level. Support has built up at 925 yesterday. Pretty good rally on the lower dollar. Overnight the dollar is higher, so it's offering some little resistance to prices today. You've got meal support at 294, resistance at 306. As far as corn is concerned, we're up against resistance at 360, and end user buying over the last 3 or 4 days has been supportive. Supports at 348. So anyway, expect choppy trade right now until we get a better handle on world and global demand. The market feels with the funds short that especially corn and soybean prices could drift lower as long as we have normal U.S. weather. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.
Orders buying 1 June Mexican peso 65.05 on a